it's been 6 months. Has there been a real tangible impact to Tesla since S&P Global upgraded?
Oh, sure. So let me resume it. Not everything that happened is only due to the S&P upgrade. And if you allow me, I just want to little bit highlight the circumstances how we got to S&P, because people have the feeling I forced them into upgrading. I mean, I did not. Let's face it. I mean, I'm a big mouth and I'm doing what I can, but I did not force S&P to upgrade. What happened is I started my tables in February, so that was on Q4 2021, and then did them quarterly. I don't know whether that rose awareness with Tesla, or whether Tesla suddenly said, okay, maybe we want a credit line just in case of, we want to make sure we have a rating in place in case we want to have a revolving credit or even issue debt at one moment. But anyway, obviously Tesla reached out to S&P. How do we know this now? Because S&P, a couple of weeks after publishing the rating, also published a study on California employment created by Tesla. So that was one of the S&P subsidiaries who did a really beautiful study on California, the impact of Tesla on California employment. And I do believe, thank you, I do believe that must have been part of the deal, right? That Tesla reached out to S&P, that they started talking, because do remember last year in May, so that was, well, in the middle of all this mess, S&P excluded Tesla from their ESG rating, right? So the tension was at a maximum, much more between S&P and Tesla, but obviously Tesla reached out. And then when you read that rating report from October 2022 by S&P, which came with the upgrade, which is actually published on my Substack if somebody wants to read it again. It was just glorious. They suddenly understood everything. So there must have been communication. There must have been a learning curve. And in any case, in that field, if I would have been at Tesla, or if someone would have asked me, the way that S&P analyzed Tesla, the way they wrote this report, but even prior, whenever we heard the S&P analyst talking about Tesla, he was much more knowledgeable than the Moody's analyst. I mean, we have to factor in that this is always coming down as well to the intellectual capacity of one single analyst, right? And Tesla is such a subject that either you get it or you don't. That there is no in between. You can't just argue on Tesla and compare it to other car makers. As an analyst, you won't get to a good result if you do just that. So the S&P analyst did his homework. Tesla worked with them. Tesla ordered the study, which was independent, but I'm sure linked. And so we had, quite surprisingly, that upgrade relatively early in October. Now, put that in the context. Elon purchasing Twitter, with all the noise that came with it, then the stock exchange market in a dire situation anyway, the stock going down to 102. So there are other elements that brought institutionals to Tesla. For example, ARK, which is one of the institutionals I follow on a daily basis, they started massively purchasing Tesla again end of November, and then increased all through January. And they're always a good example because they act with ETFs where we can really monitor it on a daily basis. But ARK is by far not the only one. So the only numbers we have is end of December for those institutionals. And the institutionals then went up from 44% end of September to 49% end of December. So these 5% doesn't sound like a lot, but it's huge amounts of money. The question is it only the S&P upgrade? Of course not. Is it also because the price suddenly became so attractive that people that may have been looking at Tesla suddenly felt this is the moment to enter? For sure, and they did well because that was a good buying level. Could it also have been that retail was squeezed out and replaced by institutional? Probably as well. Margin calls. I mean, there were lots of people in a dire situation then. So I think it's a couple of things, but obviously this S&P rating upgrade helped a lot.
You mentioned, again, it went up, institutional went up from 44 to 49%.
49. Mm-hmm. Yeah.
So to someone who is not familiar in the industry, that may sound, okay, that's 5%. What was everyone making all that noise about? we're curious to hear, from someone who works in the industry, is there a lag time between a credit rating upgrade and more institutions buying a stock? Like maybe they only reallocate a portfolio once every 6 months, 9 months, 12 months.
Exactly. You're spot on. That is exactly what happens. We're talking here about people that are the big pension funds, maybe even in a not so close but future Warren Buffett. We're talking people that are obviously fund managers, but we're talking people that actually will purchase Tesla for a long-term investment, not traders, not people that do this on a short move like hedge funds or whatever, but people who do this on a basis where they really believe Tesla should replace another stock they have. And so we've seen that with replacements of Apple. I think it was one of the Canadian pension funds that replaced their Apple position partly with Tesla positions. There you go. I mean, how are you doing this, Daren? We didn't talk. This is perfect. You should become a producer. So we see this in a couple of funds, and pension funds is really interesting because pension funds are big chunks. They make these decisions. They then build up positions. So I'm sure this is not the last time we hear of these people, and they will then stay there for a good time. And I mean, like I said, the price was also very, very attractive, right? I think we came down to a PE ratio of 32 or even lower. So at these ratios, it became so attractive. I can also tell because Gary had said that publicly, he at that moment from November to end of January had so many people from the institutional world inquiring with him because obviously they know he is on a daily basis analyzing Tesla and has a very close look at it, and he was asked and on the phone permanently with people that hadn't invested in Tesla before, were starting to look at it, and even Tony Sacconaghi from Bernstein, who is always very prudent on Tesla and not a very big Tesla lover, said at those price levels it became interesting to purchase it. So I do believe those things helped as well. But of course, the credit rating helps as well, because there are still lots of pension funds that do need sometimes even a double rating, meaning both from S&P and Moody's or Fitch, but Fitch is not rating Moody's, so we don't have the choice. We have to do it with S&P and Moody's.